Welcome to the SCR Home Financing Podcast, where we believe a legacy is something you build, not just something you leave behind. And now, here's your host, Jeff Chisum.
Hey, this is Jeff Chisum with the STR Home Financing Podcast. Welcome to episode 58. Hope you are doing well. Wanted to record an episode on some very positive news. And when I say positive news, I've been in this industry for 16 years now. And as we go through cycles with downturns and changes in the economy, we often see the big investors start to draw back. So that looks different depending on the product, but typically we'll see the big banks, who are the major players when it comes to jumbo loans, start to add some restrictions. So we'll see reductions in loan amounts, loan to value requirements, higher rates. So that's usually the first sign that I've seen in the past where there's more changes to come, because all of those smart guys, the analyzers who are looking at the data, who are forecasting for looming changes that are happening in the market, that are looking to mitigate risk, will start to draw back. We've been through that cycle here for a couple of years now. And when you see news come out that reins are starting to be let up and loosened, it's always positive. So we're seeing that in the DSCR arena, and wanted to bring that to the attention of those that are highly interested in that product. So DSCR, debt service coverage ratio loan, is where we're not looking at personal income to qualify someone. It is mainly on the property's ability to show that it can generate gross income to match the principal, interest, and taxes in insurance payment. So we're not looking at tax returns. We're not looking at a borrower's own ability to pay the loan back. It's all based on the property's ability. So this product has been an instrumental tool to use when someone's looking to scale and they just don't have a strong tax return for whatever reason. Typically, it's going to be a business owner who writes off what the law will allow. And so from a tax standpoint, tax return standpoint, they just don't typically qualify for those traditional loans. So it's been a great product. So I just wanted to share with you some of the updates that we've made that show that the reins are starting to loosen when it comes to investors and their appetite for risk. So really just going to go down the list and share those. The first one is cash out seasoning reduced from 12 months to 6 months. So it used to be, if you wanted to do a cash out refinance on a DSCR loan, you had to wait 12 months before you could get a new appraisal, and the loan structuring would be based on that new appraised value. Now you only have to wait 6 months. So that is key when someone is looking to leverage their cash that they have tied up in a deal. So maybe you went in, bought a property under market, did renovations. No longer do you have to wait 12 months for that new improved value. You only have to wait 6 months. So that's a big deal when it comes to timing and having to wait to pull that cash back out to redeploy it or recoup it. The second is maximum interested party contributions increasing from 3% to 6%. So this is going to be when you're going into a deal, you're negotiating, the amount that a seller can contribute towards closing cost is going to go up from 3% to 6%. So what that might look like is you want to have all your closing costs covered, plus maybe you want to buy down the interest rate, or in the case where there's a prepayment penalty, which is usually the equivalent of 3% to buy that out. Now you've got some room to play with where you can negotiate the seller paying up to 6% and maybe use those 3% of those concessions to buy out that prepayment penalty, put yourself in a position where you feel like you can refinance if the opportunity arises and not have to worry about paying that on the back end. Gift funds now eligible on 75% LTV where they were at previously 70%. So you go into the deal, you want to use gift funds You don't have to put down 30%. Now you only have to put down 25%, and you can use those gift funds. So that's a big deal in some cases. Minimum credit score reduced from 740 to 720 on 80% maximum LTV on purchase and rate and term refinance with the DSCR greater of 1%. So credit scores going down. And I'm mentioning all of this not only because they're significant, but because as a originator, I never want to deal in terms of maybe, possibly, we'll have to see, which is often the case when you broker out a deal. So a lot of times brokers will go out to different entities, investors, and a lot of times what they'll find is that investor has a moving target on what they're willing to accept. So to have a product, which I don't like to broker out deals, I don't like to lose that control of the process. I don't like the situation where we have to deal in the gray area of uncertainty. So I like the fact that these policies have been put in place, and we can use those when we're advising a client on what can be done, what can't be done. So this is significant to have this in writing. So another one is minimum credit score down to 680 at a 70% maximum LTV, now available on a cash out refinance. Cash out is a big deal, and we've seen a lot of restrictions in place. To be able to go down to that 680 credit score and maximum of 70% LTV is another big deal. Increase maximum cash out from 750,000. So an increase there of 250,000 that you could pull out of a deal. In the case of it, increase the maximum LTV from 60% to 65% and a maximum loan amount of 1.5 million to 1,750,000 for unlimited cash out. So another place where an increase in what you can do and what's allowed. Hopefully this is good information, favorable information. It's positive news when it comes to these products that are just instrumental in being able to go out and make deals happen, and definitely just a starting point in things to come when it comes to lending and what's going to be made possible. So hope this information helps. Always willing to jump on a phone call, discuss what you're looking to do, what your options are. You can always go to my website, strhomefinancing.com, to set up a call. Always happy to visit. Until next time.
Jeff Chisum is a registered mortgage loan officer with CMG Home Loans, NMLS ID 1820. CMG Home Loans is an equal housing lender. All programs, products, and terms discussed on this show are subject to change without notice.